for Powerica Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Before we begin, a brief disclaimer. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance, and it may involve risks and uncertainties that are difficult to predict. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shubhadeep Mitra. Thank you, and over to you, sir.
Thank you. Good afternoon, friends. On behalf of Nuvama Institutional Equities, welcoming you all to the 4Q FY26 results conference call with the management of Powerica Limited. We have with us today Mr. Jairam Oberoi, Full-Time Director at Powerica. I will now hand over the call to Jay for his opening comments. Over to you, Jay.
Thanks, Shubhadeep. Hi, good afternoon, everyone. Welcome, and thank you for joining Powerica's Q4 and full year FY26 earnings call. I'm joined today by our whole-time director, Mr. Pradeep Gupta, our group CFO, Mr. Ritesh Agarwal, and SGA, our investor relations advisor. The results and the investor presentation have been uploaded on the stock exchange and company website. I do hope everyone has had a chance to look at them. This call marks an important milestone for us, as it is the first earnings call after Powerica's listing. We are grateful to our shareholders and investors for the trust and confidence they've placed in us. I am pleased to share that during the periods of FY26 and Q4 FY26, the company registers its highest ever performance with sustained margin growth. Our group CFO will talk more about the numbers in detail. Our FY26 financial performance reflects decades of perseverance, disciplined execution, and dedication. This being our first call, we may not have interacted with many of you valued investors. So that being said, let me take you through our journey till date. In the early 1980s, India's power infrastructure was severely lacking, and there was no organized domestic market for diesel generator sets. Industries that required backup power had to deal with multiple unorganized vendors, leading to delivery times of 8 to 10 weeks. Our founder, Mr. Naresh Oberoi, worked relentlessly to establish DG sets as a recognized industrial category and built the infrastructure to reduce delivery times significantly. This commitment to reliability remains the foundation of our operations. Since 1984, we have partnered with Cummins India as one of their key OEM partners. We have access to their complete product range of 7.5 kVA to 3,750 kVA, allowing us to meet 90 to 95% of market requirements with a single engine platform. In 1996, we started MSLG, our medium-speed large generator division, and further developed our association with Hyundai in 2014. The MSLG range, which spans from 3,000 kVA to 10,000 kVA single units, serves continuous process industries that require capabilities beyond standard DG sets, such as cement, steel, nuclear power, fertilizer plants, and other strategic infrastructure projects. We are currently one of the few organized players in India capable of offering on-site assembly and end-to-end engineering at this scale. Further, as we integrate DG sets, MSLG, and our allied businesses, our product portfolio now covers a vast range from 7.5 kVA to 10,000 kVA, which is the broadest generator range provided by a single integrated manufacturer in India. For this segment, we have 3 manufacturing facilities located in Bangalore, Silvassa, and Khopoli. Here, we maintain full control over the manufacturing of acoustic enclosures, fuel and exhaust systems, control panels, and all other auxiliary items. Except for the engine and the alternator, all components are manufactured, processed, and tested in-house, providing us with direct control over cost, quality, and delivery timelines. This control offers a meaningful competitive advantage in a sector where execution reliability is a key differentiator. As we look ahead, the outlook across our DG set business segments remains strong. Backed by our data center application, DCA-approved engines, and gensets, we are well positioned to capitalize on the growing demand from the data center industry. particularly with the high horsepower DG sets. At the same time, our DG set business continues to benefit from a well-diversified customer base spanning manufacturing, real estate, infrastructure, pharmaceuticals, government and defense, and IT and data centers, as well as rental fleet operators, providing resilience and broad-based growth opportunities across multiple sectors. In 2008, we entered into the wind power sector as an independent power producer. Today, we own and operate 12 wind power projects in Gujarat with a total installed capacity of 330.85 megawatts. This segment is led by Mr. Pradeep Gupta, who will take the discussion further on this business segment. Further, I would also like to highlight our associate company, Platino Automotive Private Limited, which is strategically positioned to address a significant retrofit opportunity arising from CPCB 4+ emission norms. The company has developed the Platino RECD retrofit emission control device, which extends to engines covering 125 kVA and above, and reduces the DG set emissions by up to 92%. With a device cost range of rupees 3 lakhs to rupees 30 lakhs per installation, the market addressable by Platino is every pre-CPCB 4 DG set in India. As state-level mandates for emission compliance evolve, we expect Platino's revenue contribution to accelerate quite meaningfully. Geopolitical uncertainties, rising energy prices, and supply chain pressures are beginning to weigh on near-term demand, especially in Q1 FY27. However, with our diversified business portfolio, we are well positioned to sail through these transient challenges. The sector continues to benefit from multiple structural mega trends like increasing electrification, renewable integration, EV ecosystem expansion, and data center investments, which reinforce our long-term growth outlook. We remain focused on the larger opportunity ahead and are targeting double-digit top-line growth in FY27. With that, I now hand over the call to Mr. Gupta, who will walk you through the wind portfolio in detail.
Thank you, Jay. Good afternoon, everyone. Let me take a moment to expand further on our wind portfolio, which comprises of IPP, EPC, and O&M for BOP. Our current IPP portfolio is backed by 25 years power purchase agreement with GUVNL and SECI at fixed tariff. Further, in addition to our existing portfolio, we are constructing an additional 52.7 megawatt project, taking our IPP portfolio to 384 megawatt at completion. Beyond this, we have already secured bids for an additional 100 megawatt with GUVNL, which are under development at Bhotad district, along with another 50 megawatt under advanced planning stage. Our in-house EPC capabilities and O&M expertise provides us with a strong execution advantage and cost efficiencies. We bank on this expertise to execute BOP EPC projects for air power wind farm at Khambhalia, Gujarat, with 175 megawatt wind power project and 250 megawatt wind power project for Torrent Surya Urja at Peed, Maharashtra. These projects contribute incremental revenues without requiring significant equity deployment, also strengthen our execution capabilities in wind and hybrid energy infrastructure. Over the years, we have built strong strategic relationships with leading global OEMs, including GE, Vernova, and Vestas. Building on this, we remain well positioned across the IPP, EPC, and O&M segments, supported by robust pipeline, cost-efficient execution capabilities, and strategic partnerships. With a clear roadmap, the company aims to scale its IPP portfolio across wind and WSH projects by 2030, subject to RE Park land allotment. Looking ahead, we are actively evaluating hybrid wind solar BESS battery energy storage system also opportunity within our own IPP portfolio. We believe battery energy storage integrated with renewable generation will play a critical role in enabling dispatchable clean energy solution in the coming years. With that, I hand over to our CFO, Mr. Ritesh Agrawal, for the financial review.
Thank you, Mr. Gupta. A warm welcome to everyone. To begin with the quarterly performance highlights, revenue from operations recorded is 801 crore with 10.9% YOY growth. EBITDA stood at 86 crore with a margin of 10.8%. PAT of 45 crore with a margin of 5.6%. With a yearly performance highlight, revenue from operation recorded 3,012 crore, which we have marked 3,000 benchmark for the first time this year in the Powerica history, with a 13.5% YOY growth. EBITDA stood at 386 crore with a margin of 12.8 overall, and PAT of rupees 277 crore with a margin of 9.2%. Please to note there is a lower tax expense in FY26 is due to a deferred tax credit of 51 crore. This is on account of a tax regime change during the year after the budget announcement. On the segmental performance, our generator set business contributed 83% of the total revenue, with a registering growth of a 10.9% year-on-year and EBITDA margin of 9.1%. And DG set powered by Cummins contributed approximately 66% of the overall revenue for FY26 and MSLG by 5%. From an operational standpoint, it is important to understand that the MSLG business is inherently a project-driven in nature, with a revenue recognition linked to execution milestone. Project completion cycles can typically range between 12 to 48 months, depending on the size of project, execution timelines, and customer site readiness. So this segment should be evaluated from a multi-quarter perspective instead of looking into a particular single quarter. On the allied business, which includes our EMI shelters, containers, defense applications, acoustic enclosure, as well as a Schneider electric Prisma panel, and including the project-related works that that contributed 12.5% of the total revenue. On the wind power, it contributed 16.9% of the total revenue in FY26, amounting to 512 crore, with a growth of 28.6% YOY and registering an EBITDA margin of 31.3%. Within the wind segment, the IPP business contributed 40% and the EPC and O&M business contributed 60% approximately. From the profitability standpoint, it is important to note that our DG business generated stable and consistent cash flow at the end EBITDA margin of 9.1%, while the wind business operates at the materially higher margin, supported by long-term power purchase agreement that provides strong revenue visibility and cash flow certainty. Following our IPO, the company has repaid the existing debt of 525 crore in Q1 2027, and currently company hold a cash including investment of approximately 450 crore as on May 26. And as a result of substantial reduction is expected in the finance cost in Q1 FY27, and that is directly going to enhance our PAT margin. The working capital cycle has improved during the year, driven by disciplined inventory management, AR management, and better receivable management. This improved reflects our continued emphasis on the operational efficiency and the strong control over the cash conversion. Further, on the capex side, we did 51.3 megawatt of a capex for the business during the year. With that, I'm opening the floor for the questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Yes, thank you so much for beginning my question. So my first question is on the Platino business. So we have the full year numbers, but in Q4, what was the number for this, for revenues and for PAT?
You're talking about Platino?
Yes.
So Platino are. I'll come back on this. You'll wait for the queue on the quarter 4 number. I'll come back.
All right. On the margin front, we've seen that in Q3 and Q4, EBITDA margins have been slightly subdued versus Q1 and Q2. Is this something that would, other income we're getting 10.5 kind of range? Is that the range that we should expect going ahead for FY27, or are we expecting margins to get better?
Ma'am, a great question. For the margin, the company has been working consistently on improving the margin. So this year, as we all know, there was a geopolitical tension that sparked during the Q4, and that also extended in the Q1. We believe this is a temporary, and you might have seen that the last year there was a CP4. The margin was down. We bounced back on the margin by 26, excluding the quarter 4, which was impacted. So we believe this is a temporary, and for 27 we believe we will be in the target. But going forward, on the subsequent quarter, this will be materially clear, and we'll come back. Further, the margin, overall margin, if you see from a business side, it is a genset as well as on the wind side. And as our 50 megawatt installation, that the revenue generation which is going to come in the in FY27. So we'll come back with a better number going to come from quarter 2 onward.
Wind generation, first 2 quarters.
And you might see the higher margin, especially on the wind side, on the first 2 quarters, where the wind generation would be much higher. Whereas in Q3 and Q4, the wind generation will be lower. So on the IPP side.
Lastly, on the EPC and the O&M side for wind, how are we seeing the inquiry pipeline build up for FY27? Other companies have suggested that there might be slight delays because of land and connectivity issues. Are we also facing similar problems?
Ma'am, we already have a order pipeline of almost, you can say 585 megawatt order which we are executing. So till December 27, we have enough orders. 175 megawatt we are executing in Gujarat, which is likely to be completed by December 26, and 410 megawatt order we have for Maharashtra, which we are executing for Torrent Power. So we have a definitive contract and orders in hand, which we are executing. So till next year, we have the good BOP orders in hand, which we are executing in the company.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Divyam Sureka from Nuvama. Please go ahead.
Good afternoon, team, and thank you for the opportunity. My questions are on the wind generation side. We are hearing from Power Grid that ROW issues are easing. So on the back of the same, how is execution progressing for the 2 gigawatt RE project, and what is the expected completion timeline?
So as far as Khavda project is concerned, it's a long-term project along with the joint venture with GE Vernova, and still we are in the process of getting the land from the Gujarat government. Post getting the Gujarat government land from the Gujarat government, only this project will get initiated with the IPP customers. So till now the land is in the final process of acquiring from the government. So till now the land is not been acquired or allotted by the government. Only after that only the project will take the shape. As far as ROW other concerns are there, still the situation is not improving, and the situation especially in the wind, the position is the same basically because competition is increasing, investments are increasing in RE sectors. So definitely demand and supply gap is there in all the windy places. So definitely that area is there and challenges will be there and we have to face it and we have to live with that only.
Okay, sir. Thank you. And sir, what were the EBITDA margin and PLF of specifically the IPP business in FY26?
So the new machines which are coming is coming with 36.5% of the PLF, and the older machines are basically 23-24% PLF. The average PLF in our profile of 280 megawatt which we were having is, you can say, 26% PLF we are having. And our EBITDA margin for the entire portfolio is almost 60%, 62%. But the new projects, the first year of the operation, it will be around 87% of the EBITDA. And gradually, after once the operation maintenance will start, it will stabilize at 80-83% of the EBITDA margin in the IPP.
Okay, sir. Thank you. And sir, what is the revenue split we are envisaging between EPC and IPP in FY27, given that in the current year EPC was on the higher side? Will a similar continue or shift towards the IPP?
No. Gradually, our IPP portfolio is going to increase, as we have told in the roadshow also. Gradually, right now we are at 330 megawatt, and this year 50 megawatt is under construction. That is going to added to the capacities. And further, we won 100 megawatt bid of GUVNL. So next year that will be added to the portfolio. So in a 4 or 5 years, gradually every year we will be adding the IPP portfolio. So gradually IPP portfolio business will expand, so top line will also be expanded. But the EPC business which we will be doing for the other companies, that will be, you can say, 250, 300 megawatt or 250 megawatt every year. So you can say around 1.6, 1.7 crore per megawatt, are almost 400 of the BOP business we will be doing approximate. Under the EPC, that will be a steady business, but under IPP, our portfolio will definitely grow in.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Devang from Modern. Please go ahead.
Hi, Powerica team. Congratulations on a very good quarter. I just have a question for the coming for this coming financial year. What are some of your key growth drivers?
Hi Devang. So from the DG side, we have seen on the macro level significant investments in capex in key segments that we cater to. One being the data centers, which is a huge driver for us. We actually entered into the data space very early on in 2021 and have gained the trust and reputation of all the major hyperscale and colo data centers that we cater to, not only in terms of supply but in execution as well. So we see this as a major growth driver on the high horsepower side. Manufacturing and realty have always been key growth drivers for us on the organic level. On the low horsepower, what we might see moving forward, maybe not this year, but into the next year, is that as EV charging stations move outside of the metro cities, they might require DG backup power to be able to guarantee 24/7 charging capabilities. So that's a new avenue that we are also exploring. We also see the rental market picking up significantly.
Thank you.
As far as wind is concerned, I think the major drivers are growth is C&I business is picking up in the country. So a lot of private players like data centers and artificial intelligence and cement industries, steel industries, they are coming out with the C&I PPA. So private PPAs are happening in the country. So that is also a very growth driver. Earlier, only the vanilla projects like wind and solar were happening. Now, a lot of products are happening like wind solar hybrid, wind solar batteries, 24/7 power, RTC power, FDRE power. So different products are coming in the market. That's the growth driver. Government is also pushing renewable power with a target of 500 gigawatt. And everybody has seen after this West Asia, Africa war and other things that how import bills are creating problem for the country. So everybody is now looking for the renewable power. So definitely renewable power is the thrust for the country, energy security and all these things. So I think for the next 5 years, everybody's thrust is on the renewable power. So that is going to give a good boost for the renewable power sector.
How do you see the revenue split changing over the next few years between the renewable power and the DG sets?
So currently it is 83% of the DG and 15% of the wind power. So in the next 4 or 5 years, it will be in the range of 75-25 only, because DG is also going to grow in the same fashion, plus the other, our allied business is also growing. So in that fashion, but wind will also grow. So I think it is in the range of 75-25, you can say, because in this wind IPP, basically the top line is the same as the bottom line. So basically that IPP turnover versus 10-15% growth in the DG, that makes a lot of difference. So in the terms of the ratio, it will be, you can say, average 75-25.
So you might see from a revenue side, it will be ranging between 75 to 80% on the genset and 20 to 25% ranges that will come into the wind. Whether which the EBITDA side, you will see the shift.
Yeah.
I see. Well, thank you so much, and I wish you guys all the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Sampath Nayak from ZTO Capital. Please go ahead.
Good afternoon, sir. This is Sampath. So my question is very particular regarding data center demand. So what is the current contribution from data center in the top line?
Yeah, so currently for last year, we had a 12% contribution from data centers.
Okay.
Looking to steadily grow, with in the coming years with a strong order book, with visibility up to the following year.
So how do you see the demand pipeline? I mean, that is second question. And what is our right to win vis-a-vis competitors? Like, who are our competitors who are, fighting with us to get the orders from hyperscalers?
Yeah, so given the outlook for data centers, our order book is currently extremely strong, with the visibility of the working throughout this next financial year. So, and in terms of competitors, I can't speak to the competition, but what I can say is that, we really have a good reputation with all the data center co-location players, as well as the hyperscalers as well. We have executed multiple projects for them successfully. So we are not really too worried about the data center space, and we have faith in our ability to grow this market and contribute to the whole AI space in India.
Right, sir. So my one key concern I see is, in US especially, like a lot of companies such as Bloom Energy, they're coming up with fuel cells, right? And that technology might eventually come to India as well. So don't you think that as a threat to your data center business?
So, as the technology comes to India, we are always the part to market for these engines and to service these data centers. So, again, we expect to receive that technology and, again, deliver it to the market along with all our installation and engineering capabilities.
Just to add, any of the new technology, whichever will come, the generator set is a power backup, which is basically an insurance for any of the activities that we do. So whatever we'll do, the genset will be there. You might see some reduction in the quantity. So any other product that will come, as Jay mentioned, we are the part to market. So anyway, that will come through us, but genset will be there. So we do not see in next 20-25 years that there is any question of the genset that will go out of market.
Yes, because Powerica is not a DG set manufacturer. We are a power solutions provider. So we'll always provide the best overall solution for the customer, and we'll always find a way to deliver it.
So one more thing, like what is the contribution of power backup as a percentage of total capex? So if some hyperscaler is announcing, let's say, X amount of capex, so what would be contribution? 100 rupees capex, and what would be contribution of power backup?
I'm not well positioned to speak on the total capex of putting up a data center, but these are high value orders for us, so I could speak to that quantum, but not on the side of total capex of a data center.
No. I wanted to understand what is our contribution in total capex.
So whose capex? It's a Powerica capex you're talking about, or you're talking about the?
So if a hyperscaler is announcing a capex, so what percentage of that would be power backup?
Look, it's a very difficult to answer because it is with them. So someone is doing with X quality, someone is doing with Y quality, and since Powerica has not done the data center themselves, so it is very difficult for us to quantify. But what we do, we supply the generator set to them. The quantity can be vary from 10 to 50 or to 60. So depending on the size, it can go up to 90. So depending on the size of a data center, we supply the instrument. So it's very difficult for us to quantify that.
Yeah, and also, at least from our side, what we see is sometimes our installation EPC work on the data centers, it can vary from, say, 25% of the supply order to even 75% of the order. So it's difficult to estimate, even a range of what percentage of a capex on a data center is.
Sure. So thank you so much and all the best.
Thank you so much.
Thank you. The next question is from the line of Vikram Datwani from Nuvama Group. Please go ahead.
Hey team, thank you for the opportunity. 2 questions from my side. What is the growth expected for the DG set business in FY27? And would it be possible to quantify how much of that is price-led versus volume-led?
So we target an organic growth of about 11-12%.
Ladies and gentlemen, we have the management line disconnected. Please stay connected until we reconnect the management. Ladies and gentlemen, we have the management line reconnected.
Yeah, so as I was saying, addressing Sir's question, we expect organic growth at about 11 to 12% from our DG space. However, we do have our medium speed large generators contribution on a milestone basis. So we might see some quarters and years go higher, especially key growth drivers, the data centers. As these orders get executed, we might, perform better than the industry standard, which is at about 10.5%. And being in the space for the past 4 decades and having significant experience with high horsepower in the data centers, we definitely expect to beat those industry average estimates.
Got it. Thank you. My second question is, could you also throw some light on the visibility for the Platino automotive business?
Yeah. So as I mentioned, Platino has these retrofit emission control devices which will fit on every single legacy DG set, as in pre-CPCB 4 plus DG set. So they have a great addressable market. Being a startup, we had to make some contributions, some investments in the marketing infrastructure of the company to really accelerate the growth. So this year was really focused on building that infrastructure, and we look to really accelerate the growth moving forward.
Would it be fair to say that this part of the business would grow faster than the DG set at, let's say, more than that 10-12% growth?
Yeah, absolutely. I mean, it's a small scale, high growth. We're supported with state level mandates to install these RECD devices as well. So, once as enforcement and accelerates, we expect our revenue and subsequently the bottom line to also accelerate proportionately.
Great, thank you. That's all from my side.
Thank you.
Thank you. Before we take the next questions, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Hetvi Sangvi from HS Investments. Please go ahead.
Hi, thank you for taking my question. My first question is, can you give a quick update on the Australia project that you are doing for MSLG?
Yeah, so the Australia project is in the advanced stages, about 90 to 95% complete. We've also secured a good service order in terms of operation maintenance for the project, which will be continuous and ongoing post that. So yeah, really looking to capitalize on the hard work that the team has put into on that project.
Okay. And also, can you throw some light on the capex and depreciation expected for FY27?
So in FY27, you might see some higher in terms of a depreciation as we capitalize 50 megawatt. Whether we are going to capitalize another 50 megawatt during the year. So you might see additional 50 megawatt capex and some bit of a higher depreciation during the year.
Okay, noted. Thank you so much.
On MSLG, we do not need capex per se. It is the service that we do.
Got it. Thank you.
Thank you. The next question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Thank you so much for taking a follow-up question. So on the inquiry pipeline for data centers, do we have current inquiries ongoing, and or do we believe that it's a long-term growth driver? Do we think that we'll have meaningful increase in contribution of data center DG sets in FY27? Currently, you mentioned it was 12%. So are we expecting this contribution to go higher in FY27 only?
Yeah, absolutely. So data center inquiries are almost consistently ongoing. We have a strong order book of 9 months work, 9 months to about a year of work cut out ahead of us. So really strong order book. The inquiries and discussions are always ongoing with the data centers because, as you know, the demand is definitely surging in the country.
The post-budget announcement, there are even surge in the inquiry that's coming in, and a lot of the people are to install a data center. So we see very robust. Order book is very strong. Also, the inquiry is very strong that is coming in. So we see very decent business in terms of a data center. Maybe just to come back on your query, you mentioned about Platino earlier. So the Platinum has a 22 crore of a sales with a 5.8 crore of a PBT during the quarter Q4 of FY26.
I'm sorry, Nidhi, just take
Sorry, you were saying something.
Ms. Nidhi, can you please go to the question?
Yes. Yes. So lastly, on just a clarification, you mentioned that 12% was DG, the data center DG. So this is 12% of the 66% of Cummins business, if I am correct.
Yeah, that's right.
All right. And not only not only data centers, but overall, what was the weightage of your high voltage DG sets of the Cummins business in total?
So it's the order book, if we talk about from a pipeline, so inquiry is always been there, and we see the order book is a very healthy from a 6 to 7 month of order book that goes on.
For FY26, I meant. So FY26, 12% is data centers, but total high voltage is how much?
You mean HHP contribution?
Yes.
So it is over 50% that we do with a high horsepower.
Yeah, in terms of value.
All right. And again, the pipeline for this remains strong for high horsepower as well.
Yes, it's continuously ongoing.
So Powerica
And other than data centers, what are the growth drivers that we're looking at for FY27?
So manufacturing and realty have always been our key growth drivers across the entire product range, right? Even with the surge in data centers, we as a proportion of our revenue, we haven't seen data center match these two industries, right? Like there's a lot of market to factor in with these two sectors, and we see rental players really picking up from our perspective as well in the market.
Okay, thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question of the day, and I would now like to hand the conference over to the management for closing comments.
Yeah, thank you so much everyone for joining us today on this earnings call. We truly appreciate your interest in Powerica. If you have any further queries, please contact SGA, our investor relations advisor. Thank you.
Thank you.
Thank you. On behalf of Nuvama Group, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.